Today we're going to be talking about refined entries, and I'm going to be showing you a step-by-step method of how to actually perform each entry type. So before we get into it, I need to say entries aren't everything. There are many other aspects of technical analysis, risk management, and psychology work that you need to improve on and you need to perfect before you can trade successfully. You can actually succeed without the best entries and without actually going for the refined entries we're going to talk about. But what these can do is massively improve the risk versus reward on the trades you're taking. If you can get refined entries, it means you can get tighter stop losses, larger targets, and therefore massive risk reward. Massive risk reward means you make significantly more profit on the trades you win than you lose on the trades that you lose, which sets you very far ahead and allows a lot of leeway for losing streaks and any rough times you have in the markets. So let's actually get into the chart work, and what I'm going to do is start off by showing you the two refined entry types that I use, and then I'm going to break them down with the pros and cons of each one. Before we move on to some live examples, I'm going to show you each of the refined entry types that I use in my trading. So we have two types. We have risk entries and confirmation entries. Now the risk entries are the slightly riskier option. These entries use sell or buy limits within supply and demand zones. These are usually higher time frame supply and demand zones, or supply and demand zones through imbalances, high interest areas. So a risk entry is going to either trigger and move straight into profit or trigger and get stopped out straight away. And the reason that they're called a risk entry is because they hold more risk than if I was waiting for confirmation, low time frame breaks of structure, and so on. So the main pro of a risk entry is always that we are going to get the best risk reward possible if the trade succeeds. The reason being, we can enter from very precise zones, very precise levels, with sometimes a 1 pip or a 2 pip or a 3 pip stop loss. So if we're targeting, 10, 20, 30 pips, we can literally get 10, 20, or 30 R out of it. So the risk entries are the best for risk reward, and what they're going to do is give you an amazing entry with a very, very tight stop loss. But on the other hand, the con of that is they are much more likely to be stopped out than confirmation entries, okay? Because we are entering with super precise levels and super tight stop losses, if that super precise level isn't correct or doesn't hold up, we get stopped out. Now, obviously, in the grand scheme of things, this evens out, because if we are getting a trade that's bringing us 10R, we could then have 5 losses in a row, and we're still up 5R. Okay, so if you're risking 1% per trade, one winning trade and 5 losses is going to bring you 5% profit. So risk entries work in that right. You have to have a bit more patience with them, and you have to be willing to encounter some losses and understand that the overall long-term plan is what's going to bring you the success. Now, on the other hand, we have confirmation entries. These are safer entries that require some low time frame breaks of structure before we enter, okay? So whereas the risk entry just comes straight in and we're looking to buy it right there and then, the confirmation entry, we want to wait for it to approach our zone, and then we go to the low time frames, the 1 minute, the 2 minute, the 3 minute time frames, and actually find the structure there. Now, if we can then see that we are forming lower lows and lower highs coming into the buy zone, what we would do on a confirmation entry is wait for a new higher high on those low time frames, so a bullish break of structure, and then we are looking to buy on the pullback. So confirmation entries are much safer, but one of the downsides of these confirmation entries is sometimes we are going to miss trades because they're not always going to come right back into our buy zone. Okay, sometimes we're going to get a trade that moves like this, and we're actually going to miss out on that trade entirely. Whereas if we used a risk entry, we would have got in. Now, sometimes we don't even get a pullback at all. We tap straight in, and then because there's so much accumulation and buying power in this region, the market just flies. So the downside of the confirmation entries is while they are much safer than the risk entries and you will encounter less losses, you're also going to miss more trades. Another thing with the confirmation entries is you do get slightly lower risk reward, because whereas we can buy so close to the bottom of the zone and so close to that precise level with the risk entry, when it comes to a confirmation entry, we do have to buy a little bit higher up. So there's pros and cons to both. Now what I'm going to do is show you a live example of a risk entry and then of a confirmation entry that I've taken recently in the markets to show you how it's done live. Alright, so here's a live example of a risk entry. Now this trade, I've already got it marked out. This was one I took a couple of weeks ago. Essentially, overall idea of the trade, we're only looking at entries today. We have the lower low structure of the market, multiple bearish breaks of structure. We have, from this point, we have obviously lower high, and then we're looking for another lower high to form. We have an imbalance into here, and obviously a supply zone. Now, this supply zone is where we're going to be actually looking to trigger our entry. And this is the kind of trade that I would look to use a risk entry on, where we have a very high interest supply zone above a large imbalance that hasn't yet been filled. So the structure's in our favor, the liquidity and order flow is in our favor, and we have a very high interest supply zone just above price. So my target for this trade was 1.37835, and essentially what I'd be looking to do here then for a risk entry is find the most precise point to actually go positioning a order and a stop loss within this region. What I would generally do for a risk entry is target the midpoint of the supply zone. So we're looking here at a 10-minute supply zone, and this is obviously quite a low time frame zone. A 10-minute supply zone, however, is going to be a high interest zone. Now, if we're on the 1-minute chart, we're going to see many different little supply zones in price that aren't actually here on these sort of medium-term timeframes. So these are higher interest and higher accuracy than 1-minute zones, and that is therefore why we would go to use a 10-minute supply zone, for example, with such prominence in the market for a risk entry, whereas we wouldn't really look to do that with a 1-minute supply or demand zone. So my entry is going to be right on the midpoint, 1.38620, and this is exactly where I actually set my order myself. Now my stop loss can obviously be really small. If we look at a 5 pip stop loss in this example, which is what I used, this just about covers that previous structure high. Now it would make a lot of sense to actually go and use a 3 pip stop loss to clear this high. However, I'm showing you my real example, and what I did myself was actually clear that swing high just in case we wanted to wick through a little bit. Okay, can't complain about a 5 pip stop. Obviously, with a 3 pip stop, it would have been even better. But regardless, very nice profits nonetheless. So the target for this trade, 1.37835. What does that do? It brings us 15.7R. Okay, so a 15.7R potential profitable trade here if our risk entry works out. So if we allow the market to play out, we will see that the market triggered to the pip and then started moving to the downside very nicely and went through and fulfilled the profit target. Okay, so this was actually insane accuracy. It could be recommended that you actually go and put your entry a fraction of a pip underneath that refined entry zone that you want to get into. Now, in this instance, I was tagged in on my broker account, but sometimes the spreads are going to mess you around a little bit. So a little bit of good advice if you are starting out with these refined entries could be just use a fraction of a pip lower than the targeted entry that you want to get, just to make sure that spreads don't mess you about. Okay, so this was a risk entry that worked out perfectly. As you can see, we flowed straight down into the profit target there from that really, really nice risk entry. And we did this by focusing on, first of all, the market structure. Second of all, liquidity and order flow. So finding the imbalances in the market, the large sell-off areas, and then actually identifying a high interest supply zone on the medium timeframes. In this instance, the 10-minute timeframe. Now remember that risk entries on the 1-minute time frame, they do work if you're trading a very refined strategy, but the higher the time frame for risk entries, the more accurate that area is going to be. Okay, if you're a swing trader and you don't use these very low time frames, you can still use risk entries. I actually took a risk entry on GBP USD for a swing trade with a 17 pip stop, and I did close the trade early at a few percent profit, but it did actually run and do 10R, okay? And that was on the hourly chart. So these risk entries can work just as well on the 10-minute timeframes, the 5-minute timeframes, as they can on the 1-hour timeframes, and so on. But obviously, you're going to need to reach for more pips because on the higher timeframes, you're going to be accounting for larger stop losses. So that's a quick breakdown of risk entries. Let's move on to the confirmation entry. So now it's time to look at a confirmation entry example. So we've scaled back a little bit further on GBP USD to look at a trade that I took just before the other one that I just showed you. So this trade, just as a basic idea, we're looking like we're shifting into a bearish market now. We do have nice impulsive downside movement. We do, however, have an imbalance left open above this relatively equal high liquidity here into a supply zone. So what it is that I'm looking to see for this trade and why I was actually looking at this trade was for this liquidity to be taken, for this imbalance to be filled, and for this supply zone to be retested before the market then made a move to the downside. Okay, so I was looking for this. Now we do have a large imbalance forming here. We have a demand zone and a key level at 1.3850, which is my target for the trade. So if we allow the market to play out, you will see that we tapped into the midpoint of that zone and then started moving down. So a risk entry would have gotten us in with levels like this. But in this instance, I wanted to wait for a confirmation entry to be more sure about the trade. And the reason was because the market was super impulsive. If we see the strength of this upside move, it's very likely when we have a very strong market like this, that previous zones can be pushed through. So this was quite a conditional trade. I figured if we see a rollover in this zone, I will then begin to look for a sell opportunity. If, however, we just bust through the zone, I won't be taking a loss because I don't have a sell limit set on the trade until the confirmations are there. Right, so let's head down to the low time frames, which is exactly where I actually find my confirmation entries, usually the 1 minute time frame. So if we go to where price currently is, we can see that on the 1 minute time frame we have a higher high, higher low, higher high, higher low, higher high, higher low, higher high. So the structure here is very bullish, okay? Very clear, impulsive moves up, corrective moves down, impulsive moves up, corrective moves down, impulsive move up. And then when we tapped into the midpoint of that 10-minute supply zone, we had an impulsive move down. This impulsive move down broke through the structure, and this is where the confirmation entry comes in, okay? So if you remember from the example I showed, the confirmation entry looks a little bit something like this, right? So that is exactly what we're looking for here, and that's exactly what we're seeing. So we have the first drive, the higher low, the second drive, the higher high, and then the break of structure to form a lower low. So then what do we know? We want to look for a retracement into the peak of that move, the supply zone, to actually sell it from. Okay, so we have some confluences in our favor here. We do have an imbalance in price just here, and we do obviously have that high interest supply zone up there. So now that we've seen the break of structure, I can go ahead and be confident that if the market does return to that level, that's where I want to sell from. So a confirmation entry does still use buy and sell limits for the refined entries. I rarely ever manually execute trades anymore because I'm going with these refined entries. So we do still use buy or sell limits, but we have them confirmed, okay? Rather than just going for a straight sell limit on this drive up where the market's still impulsive to the upside, we're looking for a break of structure and a shift into bearish momentum, where we then go ahead and place our sell or buy limits to take the trade down after the structure is confirmed on the lower time frames. So for this trade, we went ahead, entered from 1.39030 with a very, very tight stop loss of, I believe it was 3 pips, just clearing the high of that zone. Now the target for this trade, obviously 1.3850, can bring massive risk reward potential if it plays out. So as we can see here on the higher time frames, it's a very refined entry to the trade with a very tight stop loss. And if we now allow the market to play out, this trade did take a while to trigger, but we will see that it does trade into the zone, retest, and move down very, very nicely. So here we are, a precise tap in and an instant move all the way down to the profit target. Another wonderful trade, this time using a confirmation entry. So I hope you found value in those two live examples. A quick breakdown and recap of the entry types. The risk entry is a slightly riskier way to enter trades. It brings you better risk reward, and it's actually going to get you into more trades. The confirmation entry is much, much safer than risk entries, but sometimes the risk reward is going to be ever so slightly lower, and you are going to miss more trades. Now, the thing with the confirmation entry as well is you do need to be active at the charts. It is my favorable way to trade because it keeps us much safer than the risk entries and it reduces the amount of losses taken. But you do have to be active at the charts, you do have to know what you're looking for, and you do actually have to accept that sometimes you're going to miss the trades because they're not going to trade into your premium zone.